And joining me now is Eddie Gabor, co-owner at the Key Advisors Group. Eddie, always good to see you, especially on this Friday. So is this option the only thing that it's going to take for these companies to try to rebound in what is still an uncertain time?
Yeah, see, this recent spike we've had this week because of the hopes of stimulus has me a little bit nervous for this sector because I personally don't think we're going to get stimulus before the election. I think they're too far apart, and they made it very clear this week that they're not just going to do a standalone bill for these airlines. So although I think the recovery stocks have tremendous upside for 2021 as we start to open up our economy again, I'm very cautious, very short term here. I feel like we're overbought. And as I said last time I was on with you, I expect volatility to really pick up as we go into the election. So we've advised investors to dollar cost average into the volatility, but have dry powder for after the election. So it feels like right now we're overbought really across the board here in the short term.
Interesting. So, Eddie, what kind of pullback could we see? And I guess, you know, all of this does seem, for better or worse, to really hinge on Trump tweets.
Yeah, see, I mean, the pullback, I mean, you could see 3 to 5% pullback, which isn't a huge pullback, but understand that's from a broad market perspective. If we don't get stimulus, you could see these airline stocks and cruise line stock go down by double digits short term. Again, I don't want to, I'm bullish, so I don't want anyone to think I'm not bullish for next year. I just think right now it's a very tough time period to be all in when everything is just based on hopes of a stimulus. That again, we've been waiting on this since the summer. What makes us think it's automatically going to happen here when we're this close to an election? I just don't see it happening. I hope I'm wrong.
You know, I think for airlines, the consensus seems to be that at some point the airline industry will recover. People need it for business travel. They need it for essentials, to see their family, for big events, to take care of them, and then just for personal travel as well. But the cruise line space is a little bit more questionable, right? Because it is almost exclusively for vacations. When you look at both of these sectors and put them side by side, are there things long term that concern you about maybe some of these individual names in the cruise space?
You know, the biggest thing is the amount of cash burn these companies have because, look, I think if we're being realistic in regards to life somewhat back to normal, we're looking at the second half of next year. You know, so how much cash burn can these companies continue to do and stay solvent as they get through this tough time? We know most of them are going to get through it, but there could be some casualties along the way. It's an unfortunate reality that that space, along with the restaurant space, is really the toughest area that's going to take to recover. They'll be the last to recover. But again, as an investor, you do want to be in while it's tough. So that way, when the recovery happens, you already received that upside. But again, I would enter very cautiously into this space. And me personally, I would wait till after the election because I think it's realistically that we won't get a stimulus until after the election.
Okay, so let's talk about this election, sort of the line in the sand that it draws, Eddie. It does seem as if Wall Street is now pointing in a Biden victory, and we see Biden only gaining his lead in the polls since Trump's diagnosis. Obviously, a lot could still happen. We're just less than 4 weeks away from the actual election itself. But what happens in the wake of that? I mean, we had a guest on our show a few weeks ago basically saying that he anticipates selling toward the end of the year if Biden is elected because of the expectation that the capital gains tax, or basically the money that you have to pay on your investments, would rise. Do you agree with that?
I only agree with that if they also win the Senate. You know, it has to be a clean sweep in order for there to be drastic changes to the capital gains rate. And naturally, I think if that were to happen, you'd probably see a bigger rotation out of technology because that's where the biggest gains were this year. So naturally, that's where investors will sell from, your biggest gainers. So yeah, I agree if it's a clean sweep. If it's not a clean sweep, then I don't agree with that statement. And as we know, 3.5 weeks is a lifetime in politics.
Right.
So at this point in time, I think it's a coin toss on who wins the election.
Are these debates market-moving events or not? The remaining two presidential debates, if we get them.
You know, if we get the debates, I don't think they move markets much, frankly. They're going to move the election polls. But look, at the end of the day, here's what the market wants. I think so many people are so caught up in who's going to win, who's not going to win. The market wants clarity on election night. The biggest election risk we have is a contested election. Make no mistake, if we have a contested election, I expect a double-digit drop because it's going to take weeks for us to find out who wins. Market hates uncertainty. That's a bigger risk than who wins or loses this election.
And it sounds like you still think a contested election is quite possible.
It is possible. I mean, look, this is 2020, so expect the unexpected. I hope it doesn't happen for the sake of this country and the markets and my clients, but I think we'd be naive to think it couldn't happen.
You know, it was interesting. Earlier this week, too, we learned via those Fed minutes that the Fed is also considering a bond buying program to further stimulate. Now, it's said many a times that a fiscal stimulus package needs to accompany that. But if that bond buying program does go through, what further stimulus measures does that provide this market, Eddie?
Look, I think the Fed is doing that because of the concerns of not having this bill that our economy desperately needs. It needs to be targeted to the folks that need it the most. So I think the Fed is just preparing us and trying to keep markets calm. If they come in with this program, look, the amount of liquidity and things they've done, let's face it, that's the reason why the market's at the level it is right now. If we did not have the Fed doing the measure that they've done, we would be in a bad spot right now. So those types of things that the Fed is going to do absolutely helps the market. But we want to try to put things in place that give us long-term stability. Trying to build this economy back just on debt and hope alone is not going to be where we need to be long-term.
All right, Eddie Gabor, always good to see you, especially on this Friday. He's a co-owner of Key Advisors Group. Thank you, Eddie.